Good morning. It's Monday, December 2nd, about 6 a.m. Central Time. Overnight, the precious metals, they came under early pressure on the Sunday night open. However, they were able to reverse off their lowest levels. Gold, for instance, trading last 26.67. The overnight low was 26.44. So a big recovery. This comes after last week's low volume trading environment with the holiday and the conclusion of November. So looking at the November performance across many different asset classes, not only the metals, it was a lot of significant volatility, a challenging environment. We had the election. It was very headline driven. There was repricing and repositioning going on. So if you look at the gold performance and the other precious metal performance for November, gold was down 4%, copper down 6%, platinum and silver were both down 10%. So any kind of recovery here, we could see a strong snapback in December. So if you turn the page here, December has been historically a much friendlier environment and month for precious metals, indices, and commodities. Of the 15 major commodities that we track seasonally, 13 of them are long trade ideas within the month of December, and only 2 are short. So looking at the overnight price action, and in the morning, what I do is I go beyond several markets beyond the precious metals to understand how the current trading day may unfold and that what are the driving mechanisms that take place. So one thing I'll monitor is the geopolitical risks, the price action, and the economic data that are all coming out. So we look at Israel and Hezbollah, really Lebanon, and we see that the ceasefire may be collapsing. It was the ceasefire last week that took many of these metals a bit lower here as some of the geopolitical risks had subsided. Now, if you look at Russia and Ukraine not grabbing a lot of headlines, that front is escalating. Something else to watch and something new is Syria and then the Turkish-backed rebels. Will Russia or Israel have some kind of response? So a lot of different things in the geopolitical sense. Now, if you look at the metals here in the overnight session, the February gold contract, $26.67, that's down $13. It did have a very strong Friday in that thin trading environment, so you would expect to see a bit of profit taking here on anyone that was playing kind of that thinner trading environment. And then now we're trading with an overnight high 26.78, low 26.44. Looking at the silver contract on March, down about 14 cents at 30.96. Copper futures are up just slightly here, sitting at 4.14 last, but well off the lows of the session. You've got aluminum up 6 1/4, platinum just about unchanged, palladium also just about unchanged, and the gold-silver ratio sitting at 86-1. Now the US dollar, which has recently been a headwind here for the gold market, now if we get this breakdown here and we monitor that failure at the 108 level, we look at it and it's been down for about 5 straight trading sessions. Small bounce back here today, but that recent headwind has now been a tailwind for the gold market. Your critical level, and I would write this down on the dollar index, is 105.57. We close below that level, it'll result in a trend change where it will go from bullish back to neutral. Something else I always monitor is 2-year and 10-year treasury yields, which are about flat on the session. Looking at the crude oil market, we do have the escalation in geopolitics over in the Middle East and also between Russia and Ukraine, and we have an OPEC meeting here on Thursday. We did have some economic data come out in China, and we saw a big bump up here with some clear signs of a recovery in the short term, with China's manufacturing activity expanding at the fastest pace since July, with new orders expected to expand at its fastest level since March of 2023. Remember, when we got to March to May, we did see that big move higher in the copper market, and that's what really had turned these markets around. So China's factory activity showed some tentative signs of a recovery. That was the big impact and news on the overnight session. So some key levels here, and just honing in on the silver market. If you pull up a daily chart on the silver market, you'll want to note the 200-day moving average. We do have a bounce near that level. Now, last August, we tested the 200-day moving average. We bounced there, and prices rallied about $7.50 from $27.50 on up to $35. So call that kind of your bottom edge on the market. Now, what you want to do is define your top edge on the market here, and the resistance that we've seen recently on silver has been about $31.98. So you want to see a close over $32. The 50-day moving average is going to be $32.35, and that's kind of your larger consolidating range. So the 50 and the 200-day moving average on the bottom. So then what you'll do is you'll define your trend reversal point, and the trend reversal point is going to be $32.85. Now, technically, I look at silver right now as more in this neutral trend at this point because of the fact that we have this range that we've been trading on for quite a while here in this consolidation. A move back over that 32 level, I think, would really bring the bulls back into the market and shift the dynamics to more of a bullish momentum. So the dollar index, again, your critical level 105.57. And if we break below that, you'll probably see the gold and silver market break out to the upside there. Excuse me. Getting into the copper market, that's been one more of the flatter sessions over the past about 10 trading sessions. So you want to look at the recent high on that copper market with 420, 421. If we get a breakout above there and you don't see silver futures responding positively, you'll probably want to position somewhat into the silver market because it's going to start to play catch up as that industrial metal. Now looking at the Fed watch tool, no big changes here. However, we've got a ton of economic data coming out. So you'll probably start to see some developments there, sitting at a 61.7% chance that the Fed does cut rates 25 basis points. You look at the data that's coming out this week, we have a ton of economic data. We've got PMI data coming out here today in the US. We also have the ISM manufacturing, construction spending, and two Fed members speaking. That ISM manufacturing data and the PMI data, I believe, will move some of these markets here. They've been in contraction territory here because of the fact they've been below the 50 level. You'll want to see those numbers bump above 50. So when you see the flash on something like a Bloomberg or CNBC or whatever news you want to see a move back over 50, but it's not expected at the moment. Crude oil futures trapped at about a $6 range at the moment, and the S&P 500, I think your first big level of support is going to be 6,000. Something that I will be doing is kind of rotating out of more of the tech, the NASDAQ that we've been long for quite a while with many of the clients, and going to some things like the small caps, because I believe that the small caps and the gold market are the two that can really overshoot to the upside here in the market. We've got some pressure on Bitcoin. Bitcoin's kind of been in this big range here from about the 88 to 92 levels, your key level support, and then just right around 99,000 to about 101. That's on that December contract on the micro Bitcoin. Many of the clients that are trading with us have that long exposure, and we look to trim some of that at those levels. So you guys got any questions, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.